Our last presenter is known very well to me. It's Martin Hickson, who's a lead portfolio manager at Wilson Asset Management at WAM. He's the lead portfolio manager for WAM Active, and he's the joint lead portfolio manager for WAM Capital and WAM Microcap. I've actually got a couple of quirky facts about Martin, and that's because some of my colleagues at WAM have helped me out here, so he doesn't know about these. But firstly, Martin's wife bought him a paragliding voucher for his birthday, and when he decided to use it, apparently the paraglide crashed into the sea, and he actually had to be cut away from the parachute. So we're actually quite lucky that Martin's here, is the first quirky fact. But the other one is that he's obsessed about chili con carne. So he's known to cook a very mean chili con carne and live off it for a week because there's so many different meal options that you can do with chili con carne. He thinks it's great on rice, toast, corn chips, the list goes on. So if you've got any suggestions of recipes, please email Martin at wilsonassetmanagement.com.au. Please welcome Martin.
Thanks, Louise. Might point out that that was over a decade ago when I had the chili con carne obsession. It was when I moved out of home and I didn't know how to cook much else, so I used to live on it. Think childcare. Over the next 5 minutes, I'm going to talk about why we think it's one of the best microcaps in the market and why we've just bought 4% of the company. So what do they do? As the name would suggest, Think Childcare operate in the childcare space. They operate 59 childcare centres, primarily in Western Australia and Victoria. So why invest in childcare? Well, as a father of 2 young kids, I'm reminded every month when I get my childcare bill just how profitable these businesses are. We also think that the Australian childcare industry is at an inflection point, and it's about to enter a period with reducing supply and increasing demand. So firstly, the supply side. After 6 years of large increases in new childcare supply, driven by easy access to credit, more recently, banks have reduced the amount that they're willing to lend to childcare developers. We believe that over 2019, new childcare supply will fall by 10 to 15%. And this will make it easier for existing operators like Think to fill their excess capacity. Secondly, on the demand side, in July last year, the government increased the Childcare Subsidy. Low-income families are now up to $2,500 better off per annum. Over 95% of Think's families are now much better off under this new policy. And so we believe that this new policy will lead to increases in demand and improvements in occupancy. So why is occupancy so important? A childcare centre operates on a largely fixed cost basis. For Think Childcare, 84% of the company's costs are made up of wages and rent. As a lot of these costs are fixed, as every additional child enters a childcare centre, the incremental profit on that child is very, very high. Currently, on our analysis, we believe that Think's centres are operating at around 75% occupancy. And for every 1% increase in occupancy, this adds 5% to their earnings. We also think that, also based on our recent industry analysis, we believe that over the first 4 months of this calendar year, occupancy levels across the industry have increased by between 2 and 3%. So what makes Think Childcare different? Nido. In October 2017, Think acquired a leading premium brand known as Nido. They offer increased levels of education, entertainment and service for parents and can therefore charge a higher average day rate. The Nido centres also operate at higher levels of occupancy. Think are currently in the process of converting their whole portfolio to the Nido brand, and currently today, 25% of their centres have already been converted. So what about management? The CEO and founder of Think is a gentleman called Matthew Edwards. He established the business back in 2009 when he acquired 12 childcare centres. The business was listed on the ASX back in 2014 and since then has generated shareholders a total return in excess of 20% per annum. He remains highly aligned with other shareholders and continues to hold 23% of the company shares. So what are the numbers? Think currently has a market cap of $100 million, has a dividend yield of 3.9%, which is fully franked, trades on a price to earnings ratio of 10 times, and has earnings growing at 30%. We believe that over the coming years, as they execute on their strategy, continue converting their centres to the Nido brand, and continue to increase occupancy levels, we think that Think's shares can trade at $2.40, which is 45% above where they're trading at today. So this is why we think Think Education is one of the best microcaps, and why over the last 4 months we've bought 4% of the company. Thank you.